Welcome to Trade Pro. This is the release video for the new Trade Pro Stochastic RSI Double Peak Indicator. There is also a strategy version, which I will show in just a little bit. This is available on the Patreon page, so link is down in the description. If you're not interested in that, then you can still learn what this is giving signals based on just by watching this video. I'll talk about exactly what is generating these signals. Even if you don't want to pay for the Patreon access, you can still do it manually using the same sort of strategy. So that is all right if you don't want to spend any money, but let's get into it and talk about this. I do just want to kind of show it on a few different pairs that are commonly looked at and traded. So we have euro against the US dollar here. We have the dollar currency index, and you can see double peak long signals or double peak short signals depending on the trend direction as determined by the 200 period exponential moving average. And here's it on Bitcoin, so we can see a few of the signals given on Bitcoin, and then on gold here. So we can take a look at a few different pairs just to show some variety. And let's talk about what is actually being done here with this indicator. How is it giving these signals? So that way, if you don't want to pay money to get access to this and the strategy, you can still kind of manually do it yourself. So I'm going to pop up a stochastic RSI here and then show exactly what is giving these signals, and also why it's called the double peak short or double peak long strategy or indicator. So if we just zoom in and take a look at some of these signals, let's take a look at this one and we'll just get real close. So it's very clear. We can see what happens is the stochastic RSI comes up and crosses down once right here. Then it crosses back up to the upside and crosses back down, all while not going below the 50 line in between those two crosses. That is what is generating these signals. Often it's a divergence, but this is not supposed to be detecting divergence. This is supposed to be detecting a double cross that doesn't go below the 50 line on the stochastic RSI. So let's take a look at a few more here, and then we'll look at some long signals as well. So we can see double peak short right here. We get a cross down here, crosses back up, and then we get another cross down on this candle. So that's going to be a double peak short. It's under the 200 period EMA, which is the trend direction filter, which you can adjust to whatever your desired trend direction filter is. So whatever EMA you want to use. And then we can see it happening again. You know, we get a cross down, we get a cross up, and then another cross down, all without going below the 50 line on the stochastic RSI, which generates this double peak short signal. And we can look at a few more back here that where we got some more choppy price action. Another one here where it's pretty much perfect, some perfect ones over here. So it's not always going to be perfect, of course, but on a higher time frame, this does tend to give some pretty decent signals a lot of the time. Now let's take a look at the dollar currency index, and we can look at a bunch of these different signals, but it's the same deal, just in the opposite direction. So we see stochastic RSI comes down below 50 line, crosses up once, then crosses back down, then crosses up again, which gives us the double peak long signal. Now let's look at this next one, which happens on this candle. We get the cross down, cross up, cross back down, and cross up again, all without going above the 50 line in between. So it gives us this long signal here. And then we can look at this next one. And often these are just really great signals. So we get this one happening. If we zoom in, it's kind of hard to see, but we get a cross up right here, crosses back down, and then crosses up again on the stochastic RSI, all without going above the 50 line here. So that's what this signal is based on right here with the double peak long. So this indicator will give these signals based on that criteria. Now, let's also talk about the signals that can be given with the strategy version and how you can try a lot of different stop loss placements and back test different configurations to see how this strategy could potentially perform if you were to maybe actually trade it. So let's take a look at the strategy version now. All right, so what I've done is taken off the indicator version and put on the strategy version. So the difference is this one, you can back test using different parameters, whatever you want to try out, whether it be moving the stop loss, using a different method of taking profit, using a method where the stop loss moves to break even at a certain point, changing the settings of the stochastic RSI, changing the exponential moving average trend filter. So there's a bunch of different things that you can try and then back test to see what the results would have been based on the historical data. So what I'll do is we'll get into all of these different settings and I'll go through all the different things that you can customize and back test. All right, so starting up top, we have the basic stochastic RSI settings. So if you want to change the settings of the stochastic RSI, it will change where the signals are generated. So you can back test that, see what works and see what doesn't work, try a bunch of different things out with that. And then we have this section right here, which it has a little explanation for. So if enabled, the strategy will only enter into a new position if the stochastic RSI crossed the 50 line since the last exit. Then we have the enabling of the exponential moving average filter. So you can actually just turn it off altogether, or you can use this as a trend direction filter. And that essentially just means if the price is below the EMA of your choice, in this case, the default is 200, it will only enter into short positions. And if the trend direction is up, so price is over your EMA, then it's only going to give buy signals or enter into long trades. And you can also choose to only allow a single entry per EMA cross. So each time price crosses up or down over the EMA, it would only enter into one position, and then it would need to cross back below the EMA and back above it before it enters into another long position, for example. Now we'll go down here where you can choose to only enable long entries or only enable short entries or just have both. We can have different entry types, so limit, market, stop entries, and then the parameters for that can all be chosen down here. And of course, each of these does have an explanation. So if you do get access and it's a bit confusing, you can always read each of these descriptions to help you out. Now, this section is on all of the different trading scripts that we offer on TradePro, and this allows you to essentially just restrict entries to a certain date range. You can also restrict entries to certain days of the week and a certain times of day, and you can skip entries if the estimated commission will be greater than the estimated profit. So you can put the commission settings based on whatever exchange you're using. You can change the commission settings and then enable this if you wish to have it skip entries if the estimated commission is going to be greater than the estimated profit. You can also have it skip an entry if the previous trade's unrealized profit reaches a certain percentage. And you can also have it do reverse entries. So essentially, if enabled, the strategy will open a long position when a short entry is signaled, and it will open a short position when a long entry is signaled. This is an interesting thing because if you find some settings that have absolutely horrible results, it could be interesting to try taking the opposite side of those trades. So you can try reverse entries, and this is a very interesting one here. Now, probably the most important section is going to be the stop loss strategy as well as the take profit strategy. You also have the ability to move the stop loss to break even at a certain point. You can do a trailing stop loss, and there's a lot of different things you can try out. I'll quickly get through these. So the stop loss strategy, where's the stop loss going to be placed? What are you going to back test the stop loss based on? So you can do an ATR based stop loss, moving average of the ATR based stop loss, percent based, tick based, wick based, or you can just disable it altogether. And this has an explanation for each of those. Of course, you can choose those specific settings here. Right now, I have it set to ATR based with 3.5 times the ATR being the stop loss placement right now. I believe the default is 2, but of course, you can try out different settings there. Now let's go down here and we can take a look at the ability to enable a dynamic stop loss. So what I was talking about earlier with being able to move the stop loss to break even or move it into profit at a certain point based on the parameters you set here. You can have a trailing stop loss also based on the parameters you set here where it begins trailing at a certain point based on what you have chosen. So there's really a lot of options here and a lot of things to try out. Essentially limitless. You could really sit there forever trying different combination of things to see what works and what doesn't, and back test that to see the results based on the historical data. And then we also have the take profit strategy, of course. So that's important to take profit at a certain point. Right now, it's based on a risk multiplier. So it's just using a 1-to-1 risk to reward ratio at this very moment. And as you can see, I have set right here. But if I want to try having a 1-to-2 risk to reward ratio or something different, I can also do that and then back test it and see what the results are. But there's plenty of different options. So you can have a take profit strategy that's an ATR based one, moving average of the ATR, percent based, tick based, or just disabled. So if you were to disable the take profit strategy, you would have a trailing stop loss most likely, or a stop loss that would move into profit at a certain point. Otherwise, it would not make sense to disable the take profit strategy. So we can go down here where we do have the ability to have a secondary take profit, so multiple take profits instead of just a close all at one point type of take profit. You could have partial profits being taken as well. And as we move down here, so we have a few different things where you can close the position early if the opposite direction entry criteria is met, close position early if price crosses a certain moving average of your choice, close it after a certain number of minutes, close it on reaching the end of the trading session as determined by what you set as the trading session. There's also a dollar cost average entry. So if price continues to go against your initial entry, you can have it do multiple dollar cost average entries and get a better average entry price. So very interesting, all these different settings that you can choose. The next one is just the activating of the custom order size setting. So if you wanted to see what would have happened if you risked 1% of your account equity per trade, or whatever you choose here, it can be contract, cash, percentage of equity, or percent risk of your equity. And that way you can see kind of what the net profit may have been based on the historical data. And then down here, we just have the alert messages and alert settings. So you can set up alerts or potentially set it up with automated trading using a third-party site like 3Commas or Capitalize.ai, which I do have an affiliate link for down below. Just a quick plug for it, Capitalize.ai. They do have the ability to connect this and use automated trading with their platform connected to TradingView and your broker. Now, that kind of covers everything here. It is a very simple strategy, but can give you some nice entries. How I'd recommend using the indicator version is to maybe consider an entry when you get a signal, but use some other factors to kind of confirm the signals, because of course some signals are not going to be ideal. And then with the strategy version, of course, you can backtest many different parameters and see what would have worked in the past and what would not have worked in. So you can really sit there and try a lot of different things out. But that's going to cover it for this one. Again, Patreon link down in the description if you do want to get access to the strategy version, also the indicator version, and 15 other strategy scripts created before these ones. You can learn my personal trading strategy on the Patreon as well, and get weekly market report videos made by me. So check those out if interested, and if not, did cover the strategy being used for this in this video, so there's no need to spend money if you don't have the money to spare. But anyway, thank you for watching as always, and have a great day.